Everything boils down to what to add, how much to add, when to sell. These are the questions we are trying to, and these are kind of holy grail of investing. And we need to find the confluence of it, which gives a strong conviction. Obviously, it's all probabilities. Nobody knows what happens, and I'll show you that as also as an example. But most of the time, it just always follows it. If you put it anywhere after this today, you go and practice it. It's all about practice, observing on the chart, and then you will be able to, find out yourself and amaze how beautifully it works. Okay. So we will see a lot of examples. So I don't believe in, giving a lot of theory. You can figure that out on the internet. Those who are new to this concept, please listen to it, try to digest it, but try and absorb that, make a lot of notes, and then do research yourself. And a lot of information is available on the internet also. Okay. And try to concentrate. Fibonacci sequence, as I said, was Leonardo Fibonacci was an Italian mathematician born in 12th century, and it's quite old. So obviously, it is not something new which has happened. So it is from 12th century. It is there. He discovered the Fibonacci sequence, and that sequence starts with basically you adding the previous number, and keep on making sequence. And when you basically you just add 1 plus 1 2, 2 plus 1 plus 2 is 3, 2 plus 3 is 5, and keep adding, and you keep going in. And that's the Fibonacci number. But what is interesting is about the golden ratio, Fibonacci ratio. Okay, when you take any number, okay, and divide with the previous number, right, or successive number, so you get a Fibonacci sequence which is 0.618. Initially, it might be 0.6154, but once you start, because it's a small number, as you go along, you will be exactly getting 0.618. Okay. And inverse of it is also called phi, right? And inverse of it is 1.618. Okay, that's the ratio, and it's also called golden ratio. And that's a simple chart which shows you. If you take 8 and divide by 13, you get 0.618, which is like roughly around 0.618. But as we go along and bigger number, it will be 0.618 always. Okay. And that's what we're going to use in our tool as well, which basically plots that. But what is also important is if you take a number here, like for example, if you take 34 and leave one number and take 89, 34 divided by 89 will be 0.382, and it's always going to be 0.382, and then it becomes 2.615, and likewise. Okay, so that's another critical ratio. So because the Fibonacci has some of the key numbers which are there, which one is important, you have to look at it. And I will show you on the chart all those numbers. But what is important here to understand is that these ratios, you can divide any number and there'll be constant numbers which you will get out of it. Okay, and that's what the key element of this Fibonacci is, and that creates those golden ratios and ratio numbers which we're using. So in TradingView, okay, everybody talks about Fibonacci retracement. You must have heard about it, but very few can actually, use the trend-based Fibonacci extension. Have you ever used this trend-based Fibonacci extension? If you have used it, type yes, just so that I know. So Fibonacci retracement, basically, as we know, the stock always moves in cycles, right? So when you look at it in, let me grab, blank screen. So if you look at it, always when if the prices are moving, it always goes into waves. Up, like if you're breathing, and down. Oops. All right. Okay. So it goes into waves, right? Like if you're breathing, you take a deep breath and then release, wave, and release down. It always stock moves always in the wave, right? But what do you observe here, right? It is like you can people call it a wave pattern, you can say breathing pattern, whatever way you want to call it, but it moves in the waves. Certain stock have this tendency. Certain stock has tendency like this. Certain stocks have tendency like this, but it all moves in the waves. Yeah, do you get it? If you get it, type yes. Type yes if you get it, so that we move forward. Yeah, fantastic. So this this wave, the wave down, is what we call it retracement, or this is basically a pullback, retracement pullback. So it keeps moving in the waves. Now, how do we know how much is going down, right? This uh, pullback in terms of it, and is something we have to track it and then use that opportunity when trend is up. When the overall trend is up, as you can see here, then you can use these tools in your advantage to see, okay, if I know a strong company like Google, Amazon, Relaxo, Pidilite, all those companies all have this opportunity in hand. So some, and all we have to do is basically identify the trend. Once we understand the bigger trend, then we use these retracements and pullbacks in our advantage. Okay. Any questions? Any questions? So we will take some examples and go through this tool. So if you see here, I'll share with you the example so that there, just a moment. So how does it work is that in case of the, so can you see the chart which I'm sharing of Relaxo? Yeah. So what we will see here is, well, let's remove everything and keep it a plain chart. Yeah. So this is a monthly chart. So you're all familiar with that, and everybody has access to TradingView. So I'm not going to go into the basics of it, but let's try to remove all the distractions. I don't want the dividends. I don't want splits. I don't want earnings. Let's keep it a plain chart here. Okay. This is a monthly chart. Okay. Now, what you see here is how we, and so if you have a stock which is basically having a history of 10 years, 15 years, then it's better to use monthly chart. If you have history less than 5 years, I would say please move to the weekly chart and start doing it, because then you get a better picture of it. And if it's less than 1 year, 2 years, 1 year, I would say go to daily chart. Okay. I use this as a thumb rule. So please follow that so that at least you get a better view. And then everybody knows about the log chart, what is log chart means, and what is without logarithmic. So I think that is something very important. Now, in this chart, what do you see? What is the trend? Can you tell me the trend? Up. Yes, you're right. The trend is up, right? So it has been long-term up. Now there has been some retracements, as you can see here. There has been retracements in the, you got this retracement, you got this retracement, you got a little bit of retracement here. So you have this retracement here, right? And now, how do we know that how much is this? So you see, if you see the stock went up and take a breather, went up, take a breather, and then it went up and it was sideways for some time, and then went up and it was there, and then it's just going up. So you see the waves pattern here, right? Yeah. Can you see the drawings on that? Yeah. Yeah. So now if I use this Fibonacci retracement and try to pull this up and see. So let's try to, what we do is, I will first put some of the key support areas, which will help me. Again, this comes with practice, so I don't expect that I'm just kind of do based on my own quick levels, which I think are the key support areas and the support and resistance areas. Okay. Now, if we take the Fibonacci retracement, right, and the trend base, these are two tools. If you go on the right, you will be able to see that. The trend-based Fibonacci expression requires three, basically three, it's a three-pointer one, whereas the Fibonacci is two of them. That's the most important thing. So Fibonacci, normal Fibonacci, when you look at it, which is the retracement, basically tells you how much could we pull back. Okay. Whereas extension tells you how much can extend from there. Okay. Do you get it? Because this is important. Retracement is if its stock is upward and it is coming down, how much it can retrace, from where it will turn back, probability. Okay. But when it turns back, how much it can go further up this time. That is what extension tells it. And when it confluence of support and resistance comes in, because some of you, like you already know why support and resistance work. It's all about the three amigos I talked about as example, where all the three of them are thinking the same lines to go up, right? Support and resistance has its role because everybody is thinking the same pattern, right? So it's all coming through that nature which we discussed about, because everybody is connected to the same dots. So everybody is acting also in the stock market the same dot. Okay. Do you get it? Any questions so far before we move forward? No questions? All clear? So let's draw that on the chart and then we'll see what is there. So let's take this. So this was a pullback and then it went up. Let's take this as in this chart. Let's go to the weekly chart here so we get a better picture. Okay, so let's take this. So we all know the Fibonacci retracement. So I'll go into trend-based Fibonacci extension, select that. So this was the first point, second point, right? Sorry, not this one. So you basically take the low point, high point, and then low point. Okay. So any upward movement and there's a retracement, you basically join those dots. So in this case, let me draw it again so that it's clear to you. Is you can first identify, let's take this is one of the low points or this is the low point, right? Let's take this as a low point. Okay. And then this was the high point of this. So let's say this is one wave, okay, of up. Then there was a correction down, okay, up to here. Now you see the plots here, okay? What do you see? So you see these are the lines which are drawn. These are all Fibonacci numbers of the golden ratios, which I talked about. Some of them are key ones, which we have to look at it. Some of them are not. I always look at it, say 0.16 is one of the key ones. 0.382 I talked about, which is also another key one. 0.618 is also another key one. Okay. So these are the key Fibonacci numbers, which I focus on. Okay. But these are also another one, which are less of it according to me based on my chat patterns and reading through it, and that's what I observe it. But again, these are all key numbers which have been plotted. So all these lines, the colors have no meaning. You can just right click on it and you can basically edit whatever you want to do. Okay, so you just right click, and I have my own settings. Sometimes you can just change whatever colors you want. Okay, you can change how you want to like it. It's, it just changes and you can do, I'm not going to do that, but what I'm trying to tell you is you can change whatever colors you like to do. And if you basically mess around like I did, all you do is settings and you do template, apply default, and everything will come back. And then you say extend right, left, so you basically can have it in full chart. Okay, so this is the setting here which you can see yourself. So I'll do that again so that it's clear. So you take this from the chart here, so a trend-based Fibonacci extension, and you look at it. Let's do auto, yeah, and take this. I'll take this number, this high and the low here, and now we have this trend. Now, what do you observe here? What do you observe on this chart? So far, whatever we learned, what are the key numbers of Fibonacci? What do you observe? Have a look at it. Give yourself a time. No problem if you're wrong. Just try and look at the chart and see. Continuous upward movement. Yeah, Raghavendra. Yes, it is upward movement. But when you look at these lines and look at some of the retracements which has happened from these lines, what do you observe? What I'm looking at is you look at all the green bars and red bars and see where are the confluences are happening. These are trend changes, Venkat says. Yeah, these are trend changes, yes. At the golden, yes. Yes, you're almost there. So at the golden ratio, some of the key golden ratios, you see there is bit of retracement or bit of, sideways movement before it takes a leg up, right? Correct? So if you look at it here, so when it moved down, it was, we said, okay, this is zero. So this is where we start. And it started moving up. The moment it reached to this line, you see here, there was a bit of a resistance. Moment it break that, it was a big candle here. But at the point of 0.5 is where it basically, this whole area, if you observe, it spent so much time to get out of this 0.382, which I was always telling this is kind of important number in Fibonacci, okay, is that to cross this 0.382 was the biggest hurdle, right? Then from 382 to 5, it just had a few hurdles around before it moved up. And then you see here 0.618, I always said that is one of the important ones, okay? How much time it took to cross this? So it spent most of the time here, and moment it went up, and moment it touched 1, which is basically the all-time high or the one number, see, it just zoomed up. Now what? 1.618 is also a Fibonacci number, as I said, right? When you do a reverse of it, you see it exactly went up. So now what I'm trying to tell you is that by looking at it, you are able to see, again, this is a confluence of support and resistance. So what I'm trying to tell you here is you need to understand this in the context of, let me, so you need to understand in the context of what's going on. So once it goes all-time high, how do I know when should I take my profit? Or at least take a profit and wait for this to pull back, and then basically I will add more, right? So if it is happening, right? So at this point, as soon as the candle formation is formed, where I know that there's a small candle, it just comes back. So you can let this, uh, you can take some part of profit here, because you might see, it, because it is a weekly chart. So last couple of months, it has been in this range, right? And for example, I just want to let you know, because this is one of my investment stock for long-term portfolio, and I always been adding on it. So I can be biased here, but what I'm trying to, this is how I am doing it. So I'm just sharing with you. So when it retraced here, okay, every level where it was there, I was looking at it, and every time when I see that there was support and resistance, because I draw that, we'll take another example, do that. That's not a problem. We moved. So you will see there will be always a confluence of support lines, which I draw, and Fibonacci lines. They'll almost be almost close by, the key ones. Then I wait for those to break resistance and then add more on top of it, right? So at least then I know that I'm averaging up on this. And every fall, every retracement for such stocks which are trend up, you want to use that opportunity to your advantage, because stock goes in waves. It's like breathing. You say, breathe, breathe down, breathe up, breathe down, right? So when you're doing this, you are knowing that, okay, this stock can retrace up to this level. So every time it retraced, it tries to, so now you also observe here other way around, right? So when it retraced, it was here, it was coming to this level 0.618, and it never broke this down, right? It was always in this range, right? Correct? If it closes below on weekly basis and stays there, I would imagine the trend has changed. It can go down and come to one of other levels also. Okay, but it didn't do that. It was in this sideways in this. So this was all accumulation zone for me to keep adding on to it, so that when the trend goes up, this is peacefully, you can basically use this opportunity to add, as long as this stop loss is not maintained on weekly basis. Are you with me what I'm saying? If you are using the trading opportunity, okay? I'm not trading in this stock, so I'm just telling you, if somebody, a lot of Fibonacci traders are using this in this way, right? So they basically, whenever they reaches to this, so you can say cup and handle. Sorry, some will say, oh, there's a cup formation, there's a handle, and this is support and all that. It's all great, okay? So what I'm trying to tell you is we're above a more in understanding the human psychology, behavior of all this happening, is this all is happening behind that as a pattern, and pattern is Fibonacci, and it's unwritten rule which is all connected with, and then we use that in our behavior. Every time you see this, go and look at it on chart, take the Fibonacci extension, plot it from wherever you see meaningful retracements and the levels are and see, okay, this is pending here. Okay, now it's just maybe you want to get into in this candle. Okay, so once it's all there, it is there, you enter here, and then you see you would have had the, if you would have taken from this candle up until here, and you know that this is the key level of 0.168, 1.168, and there'll be a correction comes in. Obviously stock trend is up. Okay, grandfather at the monthly basis is a grandfather, weekly is a father, daily is a son. Okay, so keep that, remember this, GFS, grandfather, monthly, weekly, father, and daily is son, GFS. So remember that. Always start with with chart. Can anybody say that? GFS. So start with grandfather, which is a monthly chart. So when you're looking at the chart here, monthly chart is basically is the first thing you need to know what is the trend of a stock. Okay, Debashish. So monthly chart is the grandfather. Okay, so everybody has to follow the grandfather because he's head of the family, right? Correct. So if grandfather says that, okay, this has to be there, so you can't break that rule. That's the monthly chart. If trend is up and father, weekly is the father, okay, has a less of importance because you have still a grandfather who's heading the head of the family. So there is no way you can break the rule what grandfather says, because grandfather says, I'm up, this has to go up. Okay, father also has to follow that, it has to go up. Okay, but son is daily. Obviously sons, they're a bit naughty, they will try to do deviation from their side, but the end of the day they have to follow what father and grandfather says. Yes, you agree? Because if the kids are doing bit of a naughtiness, you always correct them, right? So if you understand this concept, if the trend is up for the monthly chart and weekly chart, on daily chart you can see it might go sideways downwards, but that is not the trend change. Okay, eventually that's an opportunity for you all to add, because daily is sun, and sun always try to do naughty things, right? And use that opportunity not to grab some at a good price. Okay, so that's how you look at it. Okay, so when the monthly chart the trend is up, weekly chart you will see bit of more, people call it noise or retracements or whatever it is, you will see much more noise on the chart. But if you look at the daily chart and you see here, how does it look like? It looks so much in waves going on here, right? Because but when you look at it, you will not be able to see it, because once you look at monthly chart, you know that in daily chart you will see a lot of noise, but noise is what helps us as a long-term investor. So you have to take advantage of when sun goes bit haywire. But as long as grandfather is up, father is up, and in the same direction, you should be okay, because sun has to follow that. If you find this powerful and it was something new, type in powerful. I hope it was a kind of aha moment for you to understand that after this, you don't need to ask anyone in terms of how, if somebody says, hey, buy this stock, okay, tell me what you're going to do. Simply open the chart. And what are you going to do? Follow GFS. That's right. One thing you have to know, there's a lot more to it. But if the stock is not traded for over 10 years, if you don't have more than 10 years chart, then unfortunately you will have to change the GFS strategy a bit. That your grandfather will become weekly chart. Okay. And then you can go to your daily chart becomes a father, and your 4-hour chart, which is here, becomes your sun. Okay, if it is less than 10, if it's 5 years and below. If stock is not listed, then you please follow that approach. This is how I follow. Again, there are a lot more to it, but I'm sharing you so that you are independent in terms of thinking. So if trend is up, then you should use it. Okay. So now that I believe everybody is clear with that. Okay, let's take another example and see what happens. Any stock you want me to take example for? You want to recommend any stock? Deepak Fertilizer. Let's take that and see what is there in this. So we go to grandfather. Look at that. Now, this stock, what do you call it? We'll take Poonawalla as well. So this stock, let's take the Fibonacci retracement. So it had a rally of its kind, right? And it's like a U-shape recovery. So now in this case, let's put some support lines. Okay, let's do some support lines here. So this was a completely a support line which it broke, and after that it went up, right? So and then this obviously it's not taken away. So there's no way to enter the stock now. Okay, and then the trend changed around this. The trend changed at 193. After that, it went all the way to 480. Now it's 372. Now we don't know. We're going to retrace. Let's check that out. So, and then this was also kind of a key level. Okay. So we're going to not go that far. Let's try to do this. So let's take these 3 points and try to do that. We'll take this as low point. High, it was a wave up and it went down. Now you see here, what do you see? So blue lines are the lines which I have drawn. Yeah, Debashish, finding the key levels is something you have to do as a practice. One of the things I can give you is that in this one, if you see here, you don't look at small retracements. You look at a retracement above 40%, right? But then again, if you really want to know how to pick up this is a completely different topic, and I cover it at advanced level in terms of finding the retracements. But at this point, you can look at anything above 40% could be a retracement levels. You can look at it, right, as a key point, because 40% is, and this is proven by a number also. Like we did that exercise where we took the day high, the month high low, right? Remember that exercise we did? Yeah, where we did the historical data for a stock for month high low, and we understood that a stock can retrace 50%. Any good stock can retrace 50%, right? 40-50% in average. So every stock has its own behavior, but say 40% will be a good number if it retraces on the monthly chart, because I'm talking about monthly chart here. Okay, if it retraces 40% on monthly chart, it's a good retracement for you to start looking at stock to add if it's a good long-term growth story, right? It's all again finding the confluence of a lot of things. What I'm trying to say, the topic for today is how to find confluence of it. The exercise we did for the price movement also links up here, because all kind of connected at the end of the day. Okay. So now let's take this one coming back. You see here, these are the key lines I've added. So here you see here my line, and it was around 0.618 is something was kind of close confluence to it. So ideally I did a rough drawing. So this 0.618 was one of the support lines, which it's coming very close to what support and resistance was saying as well, right? Once it crossed that, and you see the blue line here, it spent most of the time here. Also, it was trying to get out of this 0.618 as well. And you see here, it went to 1.68, it crossed that, and moment it was trying to go another key level, which is 2.618, it never ever reached there. It never had that gumption to cross that. Second time also. And when it retraced back, it went back to same level where it started. You see this? But every time you see 0.168, it's trying to break here. You see this candle? So it was a clear indication. If somebody wants to book profit, should understand this is the place where the trend was changed here, and it's not able to cross this point 1.618. Hey, it's going downwards, because all probabilities it's going to down because it's not able to cross that, and there's a red candle formed after that. And this is a monthly candle, guys. Yeah. And then it went down. It come back to, it couldn't stop. It just was a complete, because it was kind of an vertical rally. Obviously, you can expect the vertical fall, because what goes in speed up, it also comes back in the same way, right? So it came back, spend some time here. Now you see the key levels here, 0.382, it spent more time here, and then it went up again in the same speed and it couldn't cross it. And it didn't, at this time, it just was so much ferocious that it never stopped. So Venkat, hope you understand this. Now you can see the key levels is, if it holds this level, it can go up from here. If it crosses, it can go, and you know which key levels to look at it. Right? Cool. Welcome. So another stock has been, this is the last stock, and I don't want to make it, I don't know what's, you know, okay, there it is, phenol. Wow. Okay, this is in green sky zone. Let's see that. Blue sky. So let's take it. So what is this? So let's take, this was the look at that. Now, when it retraced back here, what is important here is, when you look at the confluence of these candlesticks and look at all those, then you start making a lot of senses, because you understand the psychology of here, what's going on. Even though I don't know this stock, okay, you can research it, but what is going on? Okay. So this was, sorry, let me put this properly. Yeah. Guys, you can turn this magnet here so that it just ticks automatically. So if you remove this magnet, what happens is I have to go and select myself. But moment you turn the magnet on, it automatically zap through that last point. If you want to, stick it to the last, the tip of this wick, or you want to stick it to the body, based on the analysis, it'll go automatically zap to that. So it'll be easier. Okay. So you can see here, what are the key levels? So 0.382, it went, and this month, since it was too volatile stock at this period, right? 0.168 is never able to cross. It was complete wick. But if you go to the weekly chart and do this, you'll understand more clearly. But I'm taking monthly chart. It's a wick means, obviously, when you look at this month, after this and say, hey, it was not able to close above this. It was, so obviously you are looking at some retracement, because it's the bulls and bears couldn't, the bulls never had the power to take it to above the 0.618, and it went back and came back to the same level where it's, the previous support level, right? And after that, the retracement start again. There you see 0.38 where it spent most of the time here, right? Most of the time here. Then you see at one, it just couldn't cross it. How many times? 1, 2, 3, 4, 5, couldn't. So when it spent more time at that level, it could be high probability that it will move down, because at the end of the day, who's making those prices? You and me are making the prices, or obviously we can't move the prices to that level, but all individuals who are buying and selling this, and depending on how much is the volume happening on the stock, it all confluence to that. You have to link all those things. What I'm trying to give you is just one facet of it, but you also look at the volume of the stock. Maybe volume is very thin, but what I'm trying to give you is a perspective that if for almost how many 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 this stock was not able to cross this level 1 and went down. So these candles are all exiting. You need to exit this and start taking off the money. If you have invested at the right levels, you take the money, at least exit some portion of it and see what happens, obviously. And then you see there's a fall and try to again did again the 0.618 was tested, couldn't go through, and look at that. After this, it just simply went back. Obviously at this time it broke all the levels, so you need to look at the, now if you look at it a different Fibonacci chart and see this, because now we have a different low, so we need to look at it differently. So let's look at the, wow. So let's look at it from here. You can chart it from anywhere you want, right? It doesn't matter. See, so even at the start of the, because I think it is 2005, so it has good history. So if you look at the start of the trading month, whichever data, I'm assuming this is the start of the month, but sometimes trading we don't have the full data, right? So if you plot it this way also, you get a view of 0.382 was a key support, and then after that is 0.5 and 0.6618. It was holding up for some time, but then after that never go. It's the first time it has gone in. So you can see there's some strong demand for this stock, right? And that demand is taking the stock higher. So you can see the targets coming in 320 if it is there, and that's a key level. You look at it. If you look at my yesterday's YouTube video, which I posted on Sangmi, who was, how many of you have seen that video? I posted on the Telegram as well on YouTube. Go and watch out for it, because that's give you some more insights of it. Okay. Because a lot of learnings what I'm doing and also teaching on YouTube is a part of it, but obviously that's part of also spreading the awareness of it, which I keep doing that exercise. But a lot of learnings you'll get it because you will have more insight being part of inner circle. Okay. So the next level, if it's sustained this level and doesn't fall back and you spend some time here, you will see 320 as one of the key levels where if it touches or it closes around this level, you can keep a watch on it and take some money off the table, right? Again, you have to do volume analysis. You have to look at what is the delivery ratios for this, and all those analysis also comes in. But by looking at simply Fibonacci, you get a better view, right? So I hope it was a powerful lesson for everyone here, and able to get an insight of how support and demand and how the Fibonacci, how this all thing can come together and give you such a powerful understanding and insight of things, to give you that clarity. Hey, at this level, let me, if I made 100%, can I take 1/3 of it at least? Because it could retrace and I can add. And when it traces and you know that it's going up, you can always add, right? If you have a highest conviction. I always say, and I hope some of you might remember that, you should be in love of returns, not love in stock, right? So you should not be in love of the stock, because a lot of people get attached to stocks because they think they are always right on that, and that's where the problem starts. Okay. Do you remember that? What was that? LR, love the returns, not love the stock, right? LS. So that's all I have to share today. And this is kind of, I don't want to, it's already 9 o'clock here, and I think we just want to come here and have a PowerPoint session. So I don't want to extend it. So if you have any questions, no problem. Thank you, Devashish. Really appreciate that. Thanks, Venkat. Really appreciate that. Do you have any questions, anyone, before we can wrap up the session and say goodbye and have a great week ahead? Anyone wants to? Thanks, Vinu. Yeah, good night. Okay, so looks like if you still have any questions, do type it on the Telegram channel, and I'll try and upload that soon to the session, and then you can, some of you who have access can review that again. But if you have any questions, just drop it on the chat and we will go through that. Good night, Devashish. Yeah, good night. See you. Bye-bye.